we will start our lesson today. Okay, today we will talk about the buy signal. How to set up the buy signal by using 3 candlestick pattern. And the first one I want to share with you is the bullish hammer. Okay, so today we will review the previous knowledge and I will help you to do it. You still remember how is the shape of a hammer? Okay, so I will show you the photos of the hammer. Yeah, the small one, the small bullet candle here is called a hammer. You see that it have a small body and very long lower wick, right? And this is the example for us to set up the scalping signal by using the hammer. Yeah, and it's not always in green. Sometimes it's gonna be in red. But by the way, they will call it the hammer, the shape of a hammer. And if the bullish hammer candlestick forms on the chart, the price will likely increase. Okay, so this is the single candlestick patterns that show that the market is gonna be reversed, and it usually happened in the support level. Okay, and it shows that the market's gonna be having the bullish reversal. Okay, the pattern represents a candlestick with a short body and a long lower wick. Yeah, like I just introduced with you. And you need to wait for the next candlestick to close above the hammer body, confirming a buy signal. All right, so the hammer is a signal for you. It's not that whenever you see a hammer forming, you have to enter the trade immediately. No, it's not. You need to wait for the next candle. Okay, and the closing price of the next candle must close above the body of the hammer candlestick. Okay, remember this. Remember this. You need to remember this sentence. I will bold it. You need to wait for the next candlestick to close above the hammer's body. If the next candle having the body close below the hammer body, we should stay away from that signal. Yeah, because that time is a false signal. Okay, so we need to wait until the next candle after that close. And if the condition meets this one, close above the hammer's body, this is going to be the closing price of that candle will be our buy signal, will be our entry zone for buy signal. Okay, and the stop loss level will be set below, yeah, below the lower wicks of the hammer. Okay, a bit. There will be a discrepancies to avoid the stop loss sweep. All right, and the take profit will be set as the previous swing high. All right, so this is gonna be easy. Yeah, and the point is we need to wait for the next candlestick to close above the hammer's body. And that closing price will be our entry zone. And stop loss will be set below the upper wick. Yeah, below the lower wick. And the take profit will be set as the previous swing high. Because this is just a candlestick pattern, so the function, the function for entering a trade, to set up a trade is kind of simple. You need to wait for the next candle to meet one conditions is enough. Okay, and always remember to set the stop loss to prevent all the probabilities, the bad probabilities gonna be happened. Okay, because it's not always the market is not always easy to trade. So stop loss will be your shield to protect your capital. Okay, it's the shield to protect your capital. It's not something so scary that we have to uh, throw it away. No, we shouldn't. That is the shield to protect your capital. Okay. And besides that, we should also observe with the trading volume. And we also need to pay attention to the locations that the hammer occur. And this is when it's located at the support level. Okay. The hammer is more reliable is when it's lying at the support level. Okay. And the signal will be more reliable if after that the market forming a continuous bullish candle like three white soldier. Yeah, but because that we need to wait for the next candlestick to close above the hammer's body, is that the enough conditions for us? And if we can compare with the trading volume, it's higher than, yeah, it's higher than the previous one. So that is more confident for us to set up the buy scalping signal by using hammer candlestick pattern. Okay, and you can also confluence with other conditions like key resistance, key support level, or trading volume is higher than. This is the confirm that the buyers come in the game and dominating the market. Okay. And you can also use other indicators like Bollinger Band or EMA, yeah, to make sure the more conditions you have, the more reliable the signal will be. Okay. And a hammer reversal pattern signals is an imminent upward trend shift. It can be identified by the small candlestick body with a long lower shadow, suggesting that buyers are gaining strength and the price will soon start to increase. However, relying solely on hammer is still ill-advised. Always check the technical indicators and monitor trading volume. Yeah, like I just share with you when trading this pattern. Moreover, it is essential to be patient, perform the market analysis, and gain hands-on experience. Remember that practice makes perfect, and you can start your trading journey with the hammer patterns on a risk-free on your training demo first to practice and less pressure because it's not your real money, it's just a demo account. So you can freely to practice applying this candlestick pattern into your analysis and remember to take notes to your trading diary. Okay, this action will help you to practice and remember the knowledge easily, faster. Okay. Because this is just a single candlestick pattern, so it's kind of simple. And we will move to the next one. There will be more things that we concern. Bullish engulfing candlestick pattern. Bullish. And this is how it's gonna be. I hope that you still remember the shape of this bullish engulfing candlestick patterns because it's in engulf. So which means the second candle engulf the whole candle standing in front of it. Okay, engulfs like a swallow the previous one. And because we are setting the buy signal, so the bullish engulfing candlestick patterns is like hammer. It should appear at the key support level. Okay, so first we need to identify where is its location. Okay, it's key support level. And this is the signal that the market about to have the bullish reversal in the near future. And suppose the previous day's candle has a small body and close lower. The next day, the candlestick has a larger body that completes engulfs the previous day's body and close higher. Okay, so yeah, just observe this. Keep in mind for the shape, for the appearance, because it's I see that this candlestick is usually appears on the real chart, especially gold. Okay, and I will show you the example later after we finished the theory. And how to set up the entry zone. Like hammer, we need to wait for the closing price of the third candle. Close above the body of the engulfed candle. Okay, so we need to wait. Yeah, we need to wait for the third candle close. If the conditions is met that the closing price is higher than the closing price, the closing price of the previous engulfed candle, we can enter the entry. Yeah, as the closing price of the third candle. And the stop loss placed below the recent swing low. Yeah, it's gonna be placed here. And lower a bit to avoid market uh, stop loss hunting. And the target at the recent swing high. Yeah, as also as usual. Okay. If we do not have yeah, it's much be better for you is the target take profit is at the recent swing high. Okay, because swing high is acting like the resistance. Yeah, and if the price break that resistance, that is the story in the future. But we need to make sure that our trading analysis is safe for us to trade. So just set the take profit at the recent swing high, or you can close the part of your trade if the take profit is about to the recent swing high, and the rest trading volume you will bet to hold it for further take profit, for longer take profit. Okay. So closing a part action is very important for many traders, especially scalpers. Yeah, that action will help you to maximize your profit because we don't know when the market will reverse. And yeah, close a part is the only action that help you to maximize your trading result. And now I will share with you some some experience about the significance of bullish engulfing candlestick patterns. Understanding the psychology and significance behind the bullish engulfing candlestick patterns is crucial for traders. These patterns signify a shift in the market sentiment from a bearish to bullish, indicating a potential uptrend. And the psychology behind this pattern lies in the fact that it shows a sudden shift in market sentiment. The buyers have taken control of the market, overpowering the seller. And this can also lead to FOMO amongst buyers, causing further bullish momentum. And as for significance, bullish engulfing candlestick patterns provide traders with an excellent entry point in the market. They can also be used as asset points to reap profits. These patterns provide a clear indications of the market trend, enabling the traders to make informed decisions. Overall, understanding the psychological significance behind bullish engulfing candles can help traders make informed investment decisions and reap significant profits in the market. And the trading strategy with this candlestick patterns. The strategies usually involves taking advantage of entry and exit points and risk management. When using bullish candlestick patterns for entry and exit points, traders can use the bullish signal to enter long positions and exit short positions. This is because the pattern usually indicates a reversal of the previous trend and potential upward shift. And risk management is also crucial when trading with bullish engulfing candlesticks, as the pattern is not 100% reliable. And this is also applied for other candlestick patterns, not only this one. One way traders can mitigate risk by setting stop loss. Setting stop loss at the low of the pattern. And this can prevent losses in case the pattern doesn't materialize or the trend reverses again. And for instance, traders can use volume indicators to confirm the bullish signal and validate the entry and exit points. So there are two things that first we need always to set the stop loss level for every analysis based on these candlestick patterns. And second, you should combine with other indicators or conditions like trading volume or other indicators like EMA, RSI, MACD, Bollinger Band, and so on. But this is also have the limitations and challenges. One factor that can affect the effectiveness of this pattern is market volatility. During times of high volatility, false signal may be more common, leading to potential losses for traders. And another challenge is relying solely on bullish engulfing candlestick patterns for trading decisions. While this pattern can be a useful tool for identifying potential entry and exit points, it should never used in isolation. Okay, it should never be used in isolation. Traders should always be aware of other market indicators and do their own research to make informed trading decisions. And this is also a powerful tool to identify potential price reversals. But to avoid the challenging and limitations from using this candlestick patterns, we always need to set a stop loss, to protect your capital. Okay, and I will move to the next part is morning star. And this is the 3 candlestick pattern. Okay. What is the time frame to watch the candle? Okay, for most of the candlestick, for hammer, we should observe it in the big time frame, like hour, because we are just a scalper, so big time frame for us is 1 hour or 4 hour to identify the trend, and to identify the entry, like the one I instruct you, we should observe 15-minute or 30-minute time frame, and if you observe that time frame, you must follow it until your signal ends. Don't switch too much. You can switch to observe multiple time frames to observe the current market trend. But when you decide to set up the scalping signal, like in 15-minute time frame or 30 minutes or 5 minutes, you should only follow that time frame until your signal ends. Okay, until you quit the signal. Okay, and the next candlestick patterns is, thank you so much for your feedback. And the next candlestick in today's topic is morning star, and it's gonna be more option for you. to set up the entry zone. And I will notice for you the advantage and disadvantage as well. Because single and double candlestick patterns is kind of simple. We need to wait for the third candle for the candle after that, having the body close above the previous one. But for Morningstar, this is the patterns from 3 candlesticks. So there will be more story, there will be more knowledge that we need to remember and consider to set up the entry zone. And this is the first method that we can set up the entry zone. First thing is immediate entry after a downtrend. And yeah, the advantage that you will not miss a chance to trade because you enter immediately after a downtrend. You see this morning star happened on your chart lying at the key resistance, key support level. Morning star appear. You can enter immediately for the next candle forming after that. Yeah, and the advantage that you will not miss the chance to trade. But the disadvantage is you entering a position without further confirmation. Yeah, so the risk reward ratio is balanced, right? You have a chance to enter a trade, but the risk is also increased as well because we don't wait for any confirmation. We don't wait for the next candle body close. So things gonna be happen. Bad things gonna be happen, right? But if we decided we need to accept it, the risk and reward. They're balanced. And that's why I advise you to set the stop loss. If we fall, stop loss will help you stay away from further loss. But it's totally dangerous, extremely dangerous if you do not set a stop loss level. If you enter the trade immediately after this pattern appears on your trading chart. Okay? But it's easy. The first thing is easy for everyone to follow, right? Yeah. But I only recommend adopting this strategy only if the market is definitely oversold. The star is the in the second section of the patterns, gaps below the first body, and the third candle penetrates well into the first. Yeah, and we can only do this when the patterns forming in this shape. Gap for the second candle, gap below the first body, and the third candle penetrates well into the first. And I don't recommend this method when trading on lower time frames, like 1 minute or 5 minutes, because the reasonable behind is that the gap between the first and second candles is much less likely in such situation. Yeah, so it's better for you is to observe this in a big time frame, like 4 hour or daily. Yeah, it's a clearly to set up the to decide that the market is about to reverse in the near future. Okay. And if you enter any trade in a big time frame like hours or daily time frame, you need to prepare the capital well. That's appropriate with your ratio, stop loss ratio, because the discrepancies is very big. And it's not only 50 pips, it's 100 pips for stop loss. And if you want to enter the trade with a huge range of stop loss level, you need to prepare your capital enough to make sure that it's appropriate for this stop loss ratio. Okay. Yeah, so that is the point when we decide to trade at the swing traders, yeah, according to the daily time frame. And for Morningstar, and for this way to enter immediately after the trade, after a downtrend, I do not recommend you to enter in the small time frame, like 5 minutes or 1 minute. Yeah, because it's kind of risky at all. And understand for this, for the disadvantage. So we have the second option for this one. you can also wait for a retest. Yeah, so this is gonna be a safer option for all traders. Okay. And the advantage is successful retest of the support established by the Morningstar provides additional validation, thereby reinforcing the pattern's credibility as the bottom reversal indicator. And this also have the disadvantage is that given that the lows of Morningstar are not always revisited, you could potentially overlook a chance to trade. Or in the common word, it's gonna be miss. Yeah, if it not come back, if the price is not retraced and retest. Yeah, retest the support level. So everything is valuable, right? Everything has its value. If we want to trade safely, you need to accept that the chance is gonna be missed. Yeah, the chance to increase your profit is missed. But anyway, that there's hundreds of method and strategy. So don't force yourself. Yeah, don't force yourself that we need to make money whenever we see any signal appears. Yeah. Safe is our priority. Okay. And the third option to identify the entry is confirmation entry. So for this one, it's gonna be not taking too much your time, then wait for a retest. If waiting for a retest, you need to wait for it hits the previous key level again, yeah, at the exact level of the Morningstar. So for the confirmation entry, you just need to wait for the next candle. Yeah, for the next or the fourth candle close, having the body close above the morning star. So that is enough for you to enter the trade. Okay, and the stop loss level will be set at the below swing low. Okay, the lowest price of morning star. And for the take profit, it's gonna be a previous swing high. Yeah, for the stop loss and take profit, the formula is the same for every buy signal. Yeah. Or you can also follow another tips is like me. I usually set is follow the risk reward ratio 1 to 1, right? 50 to 50, 50 pips to 50 pips. Stop loss and take profit. And after you gain 30 pips take profit, close a part of the trade and hold the rest to the further take profit. So there are two ways. One need to one is based on the area, the place of the second candle, the lowest point of the second candle. Or you can follow to risk reward ratio. Yeah, to set the stop loss and take profit. And the advantage of confirmation entries is that this strategy serves to confirm the market's direction following the emergence of a morning star. And the disadvantage is the risk to reward ratio worsen. Because sometimes that you see that the price is already increased and your entry zone is kind of far away from the lowest point of the second candle. And if you say that the previous swing high is kind of near to your target, yeah, it's not significant to set up the scalping signal. All right. If the take profit distance is closer than the stop loss level distance. Yeah. So it also depends to the market situation. And if you see that the previous swing high is kind of far from your stop loss ratio, you can set up the entry zone at the closing price of the next candle. Okay. And the last option The last option that you can set up the signal by using Morningstar pattern. Additional bullish signal. Okay, so this is gonna be a combination. Yeah, we have a cameo. In this case, is hammer. Yeah, hammer is cameo in this case to set up the entry zone. When you see a morning star appears and the price retrace to retest the previous key level, key support level, and luckily we have a hammer appears at the key support level. And the candle after that, the closing price of the candle after that is your entry point. Okay, and stop loss will be set at the lower point of the lower wick. Yeah, and the take profit will follow as the previous swing high. Okay, so that's it. This is not big deal for stop loss and take profit. The most important thing is for you to identify the entry point. And this one, actually, this one is rare to happen. That we have the cameo is the hammer, and it's not always happened. So yeah, if we wait and sometimes that it's lucky that yeah, I learned this lesson and I found this signal that appears on the chart. Okay, so it's gonna be more clue for you to enter the trade with this additional bullet signal. Okay, and also it's gonna be increase your winning rate by having another conditions like increasing in volume and other indicators like RSI or EMA. Yeah, the one I usually use in my trading strategy. Yeah, trading analysis strategy. And the advantage of this option is a bullish reversal patterns is that either precedence for success in the morning star reinforces its credibility as a bottom reversal signal. And the disadvantage here is if no additional candlestick patterns emerge within the price range of the Morningstar formation, you risk missing a trading opportunity. Yeah. So this is the advantage and advantage. So for you to consider which method that is appropriate for you to identify the entry zone. Okay. And that is the four option to identify the entry, to set up the entry zone by using Morningstar candlestick patterns. And I know that it's going to be difficult for you to remember the appearance of the patterns, but we have to practice. We have to observe it on the chart, on the real chart, many, many times. Yeah. So success is not for anyone lazy. Okay, so this is the quote. This is the quote and the lessons I always learn by heart for this. And that is also the reason why I have to update my knowledge every day. Hi, not fine. Okay, so now I will read your comment and answer it. Which one is more likely to happen? Why are you asking for the patterns or the options of the Morningstar? And if you're talking about the pattern, candlestick patterns, for me, observing the chart, especially gold, I realized that the bullish engulfing candlestick patterns is usually happens. Okay, so now we will move to the real-time chart. I will share my screen. Okay. You can see the chart that we are looking at 15 minutes. Okay, so let's practice and find the bullish engulfing. It's usually happened in the key resistance level. Key support level, right? So anytime you see that the market is just moving sideways and it's lying below a resistance. So that is when the market is accumulating and the key resistance and the key support level is forming. Yeah, it's forming. And here we have engulf, right? Okay, let me mark it on the chart for you. It's very easy for you to identify when the market forming bullish engulfing candle. As long as that is lying at the key support level. Yeah, you see it's a downtrend, right? This is a downtrend and the market is accumulating for this area for a while. Suddenly it's forming a pattern, bullish candlestick patterns like this. You see that bullish candle, after that is totally engulfed the previous bearish candle. So obviously that this is the signal that the market reversed. But we also wait for the next one, and the body of the next candle is a bit higher than the closing price of this engulfed candle. So definitely that we can set up for the buy signal. Okay, buy signal. Long positions here around here. Stop loss level will set below a bit of the lower wick, and our take profit will set as the nearest swing high. Okay. Actually, that is can last to here, and the result you can see the market is starting for a very powerful uptrend. After that, right? And the risk reward ratios here is too perfect. It's up to 4.4, which is just one for risk, but you will multiple 4 times to your reward. Okay, so yeah, that's just the actual example for you when you identify the market by using the bullish engulfing patterns. And I believe that this is very easy for you to know it, to acknowledge, to realize what these candles. And you can also open the volume if you just to make sure that one more clue for this. You see that the trading volume here is also increased. Yeah. Volume is just the additional signal. Yeah, additional conditions for you to make sure your trading analysis. Yeah, entry point is that second candle close price. When it closes and the body of that candle is higher than the previous engulf candle, you can confidently to enter the trade. But you need to observe the chart. Yeah, the problem, yeah, the issues is just you have to pay your time. Yeah, you spend your time to observe the chart. So it's not always happened. So that's why that we need to spend our time to observe the chart. So it's gonna be a I don't know that you can be relaxed when you observe the chart or not, but anyway, that every trading, every analysis, we have to accept it. Yeah, we have to spend our time, like me, more than 14 hours a day looking at the chart. And yeah, I already practiced in a long time. And for me, it's very simple. And yeah, I already get used to it. So it's not a problem at all. But for anyone new, you can spend for your time like around 1 hour a day, yeah, to wait for any gapping signal. Or you can do a retest, back test, yeah, on trading view. And I believe that the bullish engulfing patterns is the perfect one for you to start your trading. There are thousands and hundreds of strategy of the patterns. If you cannot remember all, choose the one you see it appropriate for yourself. Okay, so that's just my sharing, my advice for you. If you really cannot remember every pages that I share for you, just choose the one you feel most appropriate for you. And after a long time observe the chart, my recommendations for you is bullish engulfing patterns. It usually happened. Yeah, it's usually happened in the real-time trading. And the winning chance is also higher. It's also getting higher. Yeah. As long as you can combine it with other indicators like EMA or volume, trading volume. Easy to use and easy to practice. Okay. So yeah, after today's lesson, I hope that you will spend more time to looking for this signal on your chart and do the back test. Or if you have time, you can try yourself to do the analysis. And if you do not have enough the confidence, you can trade on your demo account first from your analysis. Yeah, after learning this lesson. Okay. Thank you very much. And yeah, that is the lesson today. And 30 minutes later, I will have the live stream on YouTube to trade real time. And I know that today the market is kind of challenging for all traders, but I hope that in my next live stream on YouTube, I will bring another qualified scalping signal to everyone. Okay, and thank you so much for joining in my private live stream today, and see you in the next lesson. Goodbye.